Welcome back. You're watching Traders Corner. I'm Bronwyn Seaborn, and with me at the desk, as usual, is Garth McKenzie, founder and editor of Traders Corner. Garth, thanks so much for your time today.
Thanks. Hi, Bronwyn.
So our local market perhaps looking a little bit boring, so we're going to pursue an offshore theme on the show today. And kicking that off, let's check in, as usual, on the S&P 500.
Correct, yeah, the local market's been a bit tough, so we'll look at a top 40 as usual and what have you, but most of our focus is going to be offshore this week. So here's the S&P 500. Not too much has changed from last week, really, in terms of the overall technical structure. I did mention on last week's show that we were bumping up against the upper boundary of this bigger channel that you can see identified by the black lines on that chart. And I said that there was this little consolidation which looked as if it was taking the form of a bull flag pattern. And at that stage, I said it looked quite feasible that it would break to the upside, provided this lateral support area at about 2870 could hold. So it did hold that support, and we did see a breakout up above the top of that bull flag pattern, which is bullish for all intents and purposes. And I still think technically this remains bullish. We can't dispute that. But obviously we've had the overnight news that Donald Trump has decided to push ahead with another $200 billion worth of tariffs on Chinese imports, and obviously this trade war, it just continues to intensify. So that has put the brakes on the market a little bit today. But you know, if we ignore that for a moment and just look purely at this chart setup, that does generally still look quite bullish to me. I'd say that if we go below 2870, which is the dotted line on that chart, then potentially we're in for a slightly deeper pullback. But broadly speaking, that upward sloping channel since April is still very much intact, and it mostly remains a buy the dips kind of market whilst that channel is in place.
Okay, great. So we also have a trade open on the NASDAQ 100, which was last week's trade. I know we were hoping to buy into the dip and kind of ride up the gains there. Are we winning?
Well, we are only just. I think you'll see when we get to the portfolios at the end of the day, I think we're up like $18 or something ridiculous.
Not too much.
It started out well for us. I identified again on the NASDAQ that there's this upward sloping channel and that it had tested the bottom of that channel last week. That also coincided with the 50-day moving average, and it looked to me as if it was likely to make a move back to the prior highs and possibly even beyond those prior highs. Now what's happened is you can see that it did bounce off the support level, so we were looking great for a couple of days, but overnight, following the announcement of those additional trade tariffs, we've seen some of the tech stocks actually coming under pressure, and you can see that very much reflected in the NASDAQ over there with that move to the downside. So what we have at the moment is a situation where the NASDAQ did bounce off the support level, but it hasn't managed to go up to the prior high, and it's now looking a little bit weak at this point in time. My stop loss on last week's trade was set at 7,300. I would be inclined to now tighten that up and say that if we start to break below 7,400, then I'll probably look to exit this trade. That would effectively mean that it has to go below last week's low point. And if it starts to take out last week's low, then I think I'll exit this trade and we'll just move on and look for something else. And we'll have to monitor that closely in the days ahead. But obviously by moving that stop loss up by 100 points, it also significantly reduces our risk on the trade. I mean, we said we would happily risk $292 on this trade. We're essentially going to shave $200 of risk off that by raising that stop loss. And that's critical in trading. You know, keep your losses small. It's one of the reasons why we've generally done well on this show over the years.
Okay, so we'll be checking in on that to see how it all plays out. We did say that our local market's looking a little bit boring, but let's have a look at the top 40 future and get a sense of why we're of that opinion, really.
Yes, that's it. So, in fact, very little has changed on this from last week when we sat here. Over the last 6 trading days, you can see that this market has been very, very choppy. These are daily candlestick patterns that I'm pointing out here on the top 40 future. And really, we've been oscillating around this 50,000 area. You can see that on the bigger picture view, there is support at those, all these low points that we've seen through May right up until now. The market has pulled back a number of times over the last few months, and it seems to have found support in this region between 49,000 and 49,500. It does once again appear as if it's been finding a little bit of support there over the last couple of days. But, you know, I mentioned the round figure of 50,000, and there you can see it's just highlighted by that dark black line over there. The reason it's significant right now is because we have the September futures closeout coming up on Thursday this week, and the 50,000 level is where there's a lot of optionality. In other words, quite a few options are written at that level, and it's not therefore entirely surprising to see that the market is quite noisy around that round figure at the moment.
So do you think that after the futures close out, we're going to see a little bit more life return to the market maybe next week?
It's possible, but I think we'll always be driven by global factors as well. So we're going to have to see what happens overseas, in the US particularly. If those markets are strong, maybe we have the potential to have a little bit of a bounce. If those markets are weak, well, then we're not going to escape that either.
Well, driven by global market factors, certainly our currency coming under a lot of pressure due to the emerging market sell-off. And you've got a chart for us of the rand there. The last I looked, we were just under 15 rand to the dollar. So what does the chart tell us about where the rand's headed?
Yeah, it looks a little bit vulnerable at the moment when I look at this chart. So here we've got a daily chart of the rand-dollar exchange rate. It goes back to June of this year, so a reasonably recent trading history. What's quite clearly notable is that this upward trend from early August has been respected over the last couple of days. Notice on Friday last week how we saw a reversal candle there off that support line, off that uptrend support line. That came in at 14.63 rand. That 14.63 is also a very significant level for a number of other reasons. It also happens to be the 61.8% retracement of this whole move that we saw from late August into the beginning of September, where the currency weakened very sharply. It's now consolidated, it's pulled back somewhat, but that 61.8% retracement area has held with precision. And again here, it looks as if this consolidation over the last 2 weeks or so is taking the form of a possible bull flag pattern. And if we start to see the currency breaking out to the upside and moving out beyond 15 rand to the dollar, then I think that opens the potential for another leg weaker, where we could once again see the currency going back up towards the recent lows that we saw, say 15 rand 70, that sort of area. So I don't think we're entirely out of the woods. I would only become a little bit more sort of confident, I suppose, in terms of the rand's fortunes if it started to trade below that 61.8% retracement. And that, as I say, comes in at about 14 rand 63. If we start to go below that level, then perhaps the rand has the potential to strengthen a bit more. But the way I see it right now, I actually think this chart looks fairly vulnerable for another leg weaker in the rand.
We'll have to see what plays out on that front as well. We're heading into what your trades of the week would be. That's a part of the section of the show that we're getting into now. But you're not initiating a trade. We're just keeping an eye on a couple of stocks. And you call them Elon Musk stocks. And the first one being Tesla, of course. You've said that you have a bit of a history with the stock. You've been burnt in the past. So why are you looking at this chart right now?
Yeah, look, I've been burnt and I've made a bit of money on the side personally out of it, but I've generally always traded it on the short side. And there's, of course, a huge discrepancy in the people out there that follow the stock. There are the Elon Musk bulls and the Tesla bulls, and they're almost like a cult following. And then there are those, and I consider myself one of those, who see this stock as massively overvalued, hugely over-leveraged, and just with a whole bunch of problems that eventually must surely come home to roost.
And surely the CEO's shenanigans factoring into that picture as well.
Most definitely. I mean, I don't think he's done himself any favors over the last couple of months. He's been behaving badly. And the most recent bad behavior, well, among other, I mean, there's actually, I think, been more bad behavior than this, but since then. But that I've circled on the chart there was when he sent out a tweet to say that something to the effect that he's considering taking Tesla private at $420 per share, funding secured. And that funding secured part is what everybody was jumping up and down about. And when sort of probed on the matter, it appeared that the funding wasn't secured, and in fact that it was, he was being mischievous with his tweets, let's put it that way. But nevertheless, it did cause quite a swift move up in the share price at that stage. You can see it went from $300 a share all the way up to $380 within a couple of days. And that obviously squeezed a lot of the shorts. Elon Musk is constantly at war with the short sellers, so I presume he had a quiet chuckle to himself over that. But it didn't last. And as you can see, since it became apparent that the funding is not there to take the company private. You can see that the share price has come under quite a lot of pressure since then, and it's traded all the way back down to $260 at its lowest point recently in the last 2 weeks. Now, what I'm seeing potentially right now is the formation of a rising wedge pattern over here. And these are typically bearish continuation patterns, meaning that it forms within a downtrend, and it usually will break in a downward direction when it eventually unfolds. So what I'm going to be watching in the week ahead, I think, is this $300 area is quite significant just from a psychological perspective, and it's a round number and what have you. But just above that, you've also got your 200-day moving average and your 50-day moving average. And if we see a reversal down from that area, which is in about $315 per share, if we see a reversal down from there, then I think there's a good chance we'll see that rising wedge pattern break out to the bottom. And then I would potentially look to put a short trade on Tesla based on the technicals that I'm seeing here.
The other company you have your eye on is actually an ex-Musk company. It's PayPal. What are you seeing there?
Yeah, that's right. So Elon Musk was one of the founders of PayPal, and then he eventually sold it off for, I think, $180 million, and then he started up with his next venture, which became Tesla and SpaceX and all the things he's busy with right now. Yeah. So what I'm seeing here at the moment, from a pure technical perspective, is the fact that the stock is still in a very nice rising trend. It's forming higher lows and higher highs, and you can see that in the last couple of days, it's begun to pull back towards the 50-day moving average, which is that blue line over there, and that's also where the upward trend would come into play. That's at around about $88 per share. I think what could be happening here is potentially the formation of an ascending triangle pattern. A triangle pattern typically has 5 waves, and it usually breaks out on the 5th wave. So in this case, you're looking at wave 1, 2, 3, 4. Now, if we start to see a reversal off of the support area that I've mentioned here at $88, then I think you could see this beginning of a 5th wave starting to form, which ultimately might end up breaking to new highs. So if we get a reversal there at that $88 area, that's where I'd be looking to buy, with a stop loss below a reversal low from the last week, essentially.
Okay, great. We're almost out of time, so let's quickly check in on the local and offshore properties.
Yeah, portfolios.
So portfolios, not properties.
So the local portfolio is very much the same as last week. In fact, it's still up 17.1% for the year to date. And then our offshore portfolio, there's the mammoth $18 mark-to-market profit that I mentioned on the NASDAQ that we've got at the moment. So we're sitting with $16,600 in that offshore portfolio, which is a 10.6% profit for the year to date. So looking good, but obviously we need the NASDAQ to play ball if we are going to see some further gains here in the week ahead.
Great. So we'll have to check in on that next week. And then just as we end off, of course, viewers can subscribe to your weekly newsletter as well.
Yes, that's it. If you want to know what's coming up on this show each week, go to traderscorner.co.za and go to the middle of the page. You'll see there's a link there to register for a free weekly email. Sign up and we'll send you the details of what's coming up on the show each week. That email comes out at lunchtime every Tuesday.
Great. Garth, thanks so much for your time.
Thank you.
Garth McKenzie is founder and editor of Traders Corner.